Our headline story: global food prices rise. Now, a year after the coronavirus sent the world into lockdown and reduced trade and commerce, another impact is being felt. Data shows that global food prices have gone up and are still rising. What are the implications of this, and what will it take for the trend to be reversed? I'm Tolulope Adeleru Balogun. Welcome. This is Business Edge. Recent data from the Food and Agriculture Organization shows that world food commodity prices rose in May at their fastest monthly rate to the highest value since September 2018. Now, this was led by oils, sugar, and cereals. The index tracks the international prices of the most commonly traded food commodities. The report adds that the FAO's vegetable oil price index averaged 174.7 points in May, gaining 7.8% month-on-month and marking a 12th consecutive monthly rise. The rise in international sugar price quotations was mostly related to harvest delays and concerns over reduced crop yields in Brazil, the world's largest sugar exporter, as the prolonged dry weather conditions impacted crop development. Now joining me is Mukhtar Mohammed, financial analyst and the CEO of Astra Dynamic Solutions. Mukhtar, thank you once again for joining me on Business Edge.
My pleasure, Tolu, on a wet Monday.
Very wet in Lagos indeed. So across the globe, what we're seeing is that stock markets have separate exchanges for commodities like food, not only for precious metals. Do these exchanges actually end up determining the prices of the traded food items, or do market forces determine these prices?
Well, in economic terms, all those things have to do with demand and supply. And so you and I know that the world has been on a lockdown for a while, so we begin to see gradual reopening of the economy. So that also could be one of the impacts. If you look at Nigeria or other African countries, during the lockdown, you saw that food commodities actually went up, especially when they have to move from one region to another. So it's the same thing globally. We are seeing this spike because in terms of movement of these goods from one country to another has been slow because of the pandemic, and also other natural causes that have to do with climate, low rainfall. But basically, I think the main challenge we see there is in terms of supply chain.
All right, and we'll get into that conversation on the supply chain, particularly as it concerns African countries. But we also know that the FAO Food Price Index averaged 127.1 points in May 2021, rather, 4.8% higher than in April, and as much as 39.7% above the same period last year. So you've mentioned a few of the factors. So beyond what you've mentioned already, what factors do you think are pushing this rise? We're seeing the COVID-19 pandemic as well. You talked about the supply chain, but this rise is on board for 12 consecutive months. So what's really pushing it?
Well, I think the second wave also had a lot to do with it. Especially some economy had to shut down again. It's a major play in the economy. And if you look at some of those commodities, a country like Brazil also have to shut down. They're also one of those countries that have to do most of these commodities. They have to shut down. India, and also because of the pandemic that was happening there, they also have to shut down. So these are major players in terms of movement of some of these goods from one country to another. So that also is one major factor. So in as much as we want to see there any other factors, but the main factor is what is driving this increase, not that any other factor. It has to do with the pandemic, it has to do with the shutting down, it has to do with the gradual opening of the economy. But also it has to do with other natural disaster incidents like low rainfall, which could be attributed to the climate change issue that government have been battling for a while.
Let's look at international palm oil quotations now. They remained on an upward trajectory in May and reached their highest level since February 2011 in the face of slow production growth in Southeast Asian countries. But when you sort of look at the timeline for this, in the 60s and the 70s, Nigeria was one of the major exporters of palm oil. And now we're sort of out of the club. We're out of the circle of those who are really gaining from this particular commodity. This is also an opportunity here for Nigeria. What would it take for us to take advantage of this sort of situation? Unfortunately, I would have to say we're not exactly positioned to take advantage of it now, but what considerations need to come into play?
You know, you've answered the question. We are actually not in a position to take advantage of it. And when we talk about position, you know, I've said time and time in your program that being as a nation, you need to look at your competitive advantage to take advantage. You just talk about the palm oil. I mean, Malaysia came to take our own seed of our oil palm. Today, they are one of the world's largest producers of palm oil. So it has to do with a lot of policies and then measures that will be put in place by the government in terms of infrastructure, in terms of credit line to the farmers that will have to grow this cash crop that they think they need to export out of their country. But when you look at Nigeria at the moment, we don't have those type of policies that tend to encourage cash crop production, especially in the area of credit, so that they can be able to do more in terms of cultivate more. But again, you need to also look at the challenge of the storage of some of these products also. If you look at all these countries that are big players in the agricultural sector, the end use, which is the end product, which is mostly getting from the initial product, they tend to have storage facility to grow this product, this commodity. But for us, we don't have that. That is where infrastructure is a challenge.
So also sugar price is something that's interesting in terms of what it could mean for a country such as Nigeria. Now, the sugar price averaged 106.7 points in May, up 6.8% from April. And this marks the second consecutive monthly increase, as well as the highest level since March 2017. This is another opening that Nigeria could have taken advantage of. But we do have companies like BUA and Dangote sugar refineries that could both reduce the cost of sugar in Nigeria as well as boosting exportation to sort of place themselves at an advantageous position in the future of such situations like this. But what are some of the opportunity costs you think might be involved in such positioning, in such move to export what is being developed and, of course, produced here in Nigeria?
I don't know how they will reduce the cost, but in terms of exporting, I think they are doing that just that. Like you rightly mentioned, Dangote and BUA, they have started exporting our sugar to the shore of Africa, and even Dangote exploiting through using Algeria as a point to begin to export its sugar to Europe nations. So, which is an advantage. Like we say, the challenge we have is what you just pointed at. Why is it not cheaper? Yeah, it could be. You'll be surprised that if this sugar is being exported from Algeria to Europe by Dangote to be cheaper because of the kind of infrastructure they have there, especially power. So what you're looking at when you talk about export and then you look at the cost, you need to look at the production level, the cost of production, which is higher in Nigeria. Nigeria has the highest cost in terms of production of any agriculture or manufacturer because of our power situation. So it's always the overhead cost in terms of business in Nigeria is high. And that is not an issue that can be addressed immediately. That's an issue that has to be addressed with long-term policies. And if you follow the trend, most of the policies that we have in Africa and in Nigeria are driven by a particular administration. Once the administrations are gone, then those policies tend to go with them. And so we don't have follow up. Rather, we see another administration come in and try to build their own policy. So there's no continuation in even a good policy, or even when it's a bad policy, how can we reject it to make it better for us? So that is majorly the challenge. In despite what Africa can do, we have, if you go to Ghana, they have the best chocolate in the world, but yet you see African countries still depend on chocolate from the United Kingdom or in other Asia countries. So it's a major challenge, and it has to do with our infrastructure and the cost of production. Because you see that to export a product from Europe to Africa is cheaper than exporting that product from within African countries. And that is why we are happy with what we have, the African Continental Trade Agreement. We tend to reduce tariffs within African countries, especially in products that you manufacture, you produce yourself. But it's going to take time for we to begin to see those results.
All right. So, Mukhtar, I want you to hold on. We're going to take a quick time out here. But when we come back, all of these prices rising on the global markets, it may not mean so much to the average Nigerian, Kenyan, or Rwandan. So let's bring it home. When we go to the markets and we've seen global prices rise, what does it mean for me when I want to shop for my family and I bring out Naira? What does it mean for the South African when they bring out their Rand to shop in their local markets? We'll get into that part of the conversation right after this. Now, still with me on Business Edge is Mukhtar Mohammed, financial analyst and the CEO of Astra Dynamic Solutions. Now, Mukhtar, let's quickly look at this about exchanges. We've seen countries that have separate exchanges in order to boost and regulate the trade of such items as coffee and tea as well. What do you think this is about? Is it about protectionism and protecting these commodities in their markets and internationally, or even using it to maximize opportunities? Or is it the two together?
It's the two together, but sometimes, again, you need to feed your people before you begin to think of exporting. So if your people are hungry, your people are not satisfied, how do you want to export? So, like they say, charity begins at home. So that's what is happening. Because after the pandemic, remember, like I keep saying, the world was a lockdown, every country for himself. So you need to feed your people. And so that is the challenge we have now. And even in terms of feeding the people, the demand on these goods are high because most of these companies or most of the farmers have not resumed fully. They're just trying to resume in terms of, in terms of the area of production and everything. So we expect this, but with time we will see an easing of this. You could see that playing for the oil price. You could see that playing out in terms of the supply chain, the reduction in all those stuff. So we will continue to see that play out for some time.
So let's break down what this means for Nigerians, Kenyans, for Rwandans, South Africans, and many more Africans across the continent as they go to the market for some of these items that are imported into their countries. Seeing a rise in global food prices or global food commodity prices, how does that translate for the average African across the continent?
Simple thing to know what you used to spend 10 naira to buy, you may have to spend 30 naira, and yet you've not bought it. It's simple thing. So what it means is that the cost of all these goods have gone up, and then the earning capability of the average African is still as low as it used to be. So also is eating up. And then the exchange rate volatility also is affecting majorly all African countries, except the exchange rate. So it's a major challenge to African countries, and it's going to take time before we are going to be able to address those challenges.
But that's on one level. So let's take it to the next level. So we know that driven by the economic fallout of the COVID-19 global pandemic, growth in sub-Saharan Africa fell in 2020, fell by -3.3%, and it's pushed the region into the first recession in 25 years. An estimated 40 million people were also driven into extreme poverty, erasing at least 5 years of progress in fighting poverty that Africa has made. Food security, or rather insecurity, plays a large role in this. In terms of the rising global food prices, how do you think they factor into the conversation around food security and poverty on the continent? So how do you think the global food prices increasing factor into the conversation around food security and poverty in Africa?
Of course, it's going to impact very much in Africa. Already, even before the crisis, we already have those challenges. The level of poverty, then food security is not really much of a challenge in Africa in terms of feeding ourselves, but the major challenge you have is exporting. And then think of that most of the African countries with the rural area involved in a lot of security challenges. If you look at Nigeria, you look at Kenya, you look at Sudan, most of the rural areas in the Kenya suburb, you have the Al-Shabaab militants causing a lot of havoc in that area. You go to Niger, you still have an offspring of ISIS, then moving towards Nigeria, also you have the Boko Haram crisis, then you have so these are conflicts that tend to add to the challenges of Africa, especially the negative side of it in the area of food production and food security. So it's a big challenge for us, and most of African leaders seems not to know what to do at the moment because they seem to be devoid of ideas, especially they keep on because they've not been able to raise revenue to begin to meet some of these challenges.
So as much as we can see the challenges there, we also have to admit, Mukhtar, that there are some opportunities for food and agricultural producers across the continent to be found in this rise of global food prices. So is there a way, you've pointed out that a lot of the governments across the continent are not really aware of how to address this, but is there a way Africa can take advantage of a time like this? Or are we going to miss it because many countries across the continent are not well positioned along the value chain, along the supply chain to take advantage of these rising prices in food commodities?
I think we are not really positioned, but I think we are trying to take advantage of it. You look at Angola and Nigeria, even without doing anything, the cost of oil has gone up to the highest it has been for a long time at 71 naira per barrel. So that affects our cost also. So with our benchmark at $40 per barrel, same with Angola. Then in terms of food production, using Nigeria also, you realize that we are becoming self-sufficient in rice production, which is also an advantage for us. So when you look at all these, then you look at other African countries, like Ghana also are still exporting the cocoa, Côte d'Ivoire also still doing the same thing. South Africa also having solid minerals in terms of growth. So we still have a little bit of an advantage. But like we pointed out also, we have the challenge that comes with production. I keep saying it. You know, the whole idea is Africans should be able to do business within themselves first. If we're able to do business within ourselves, we'll be able to build capacity to be able to export. Because what happens is that when African products are being exported outside the shore of this country, even to major nations that need them, the cost of production make those commodities very high, even to the nations they are exporting it to, especially when they have to pay tariff. Let me give you an example, which will start in Nigeria. The cost in terms of production of crude oil alone. Remember, we say that it costs us even at about $25 to provide to do one liter of crude oil in the international market, and then we have to sell it. While in other countries, like other major oil companies, cost them about $8. So you can see that the major challenge with Africa has to do with the production side in terms of bringing costs low. So by the time cost of production, cost of doing business is low, then you'll be able to export at a cheaper rate, then you attract the market. What is making China what they are today is because of the cost of production that is low, especially in the area of labor. In Africa, the labor is cheap, but infrastructure, in terms of most of these African countries, companies in Africa have to provide power for themselves. And it involves a lot of investments.
All right, Mukhtar, as we start wrapping up, let's see what we can expect coming soon. So maize prices started to retreat at the end of May on improved production prospects in the United States. International wheat prices also showed a late-month decline, but averaged higher in May than in April, while international rice quotations held steady. We've also seen reduced crop yields in Brazil, which is the world's largest sugar exporter, even as large export volumes from India sort of contributed to easing the price surge. So what do you think we should expect of food prices as we get into the second half of the year?
Take it from me, those costs are going to come down. As production begins to improve, we'll see those prices come down. And as we open up more of the economy, we'll see those prices come down. And then, as like you said, some nations that were so dependent on some of these products are beginning to look inwardly. So we begin to see those results come in from those nations, even if it might not be 100% entirely. But we see that some nations will need not so much of maize again. They've been able to cultivate the kind of maize they will be able to use to feed themselves, so they will not export too much of maize from other nations. With sugar also, like Nigeria now will no more export sugar. because we've been able to do sufficiency in that area. So we'll see that play out especially when we open up. But the challenge, like I keep saying, will we be able to deal with some of the security challenges, especially in the developed nation? That is just the challenge. But in terms of whether the price will come down globally, I'm very certain that they will come down globally, especially with cost of production improving.
All right, Mukhtar Mohammed, financial analyst and the CEO of Astro Dynamic Solutions. It's always a pleasure. Thank you so much for joining me on Business Edge.
My pleasure to love.
All right, and as we wrap things up, we're going to give you NC4 to watch. These are a few stories that we are keeping our eyes on as we see how they develop across the day. We start with Sub-Saharan Africa, where the news is overall, overseas remittances into the region have declined. They fell to $42 billion, I beg your pardon, in 2020 from $48 billion in 2019, a 12.5% drop due to the COVID-19 pandemic. Now, according to a report by the World Bank and Nomad, the decline was mainly caused by movement restrictions introduced in most countries around the world and a rise in unemployment to the main funding source of host countries. Two on the list, the African Development Bank Group and Ghana Securities and Exchange Commission have launched a project worth $400,000 in a bid to strengthen Ghana's capital markets. This follows the signing of a grant agreement to develop a risk-based supervisory solution for the local capital market. The grants from the African Development Bank's Capital Markets Development Trust Fund will finance the provision of technical assistance and capacity building for the Securities and Exchange Commission, which is the market regulator, and as well as the Ghana Stock Exchange. We head to the southern part of the continent, where South Africa's President Cyril Ramaphosa has scolded mobile phone companies for bringing legal action against plans to issue more broadband spectrum. He urged them to resolve the matter for the benefits of the country. When the Independent Communications Authority of South Africa released the terms of the auction, the Johannesburg-based MTN argued that prioritizing smaller operators means the carrier will be shut out of bidding for new 5G spectrum. And finally, the Minister of Communications and Digital Economy, Issa Pantami, says Nigeria hopes to achieve 90% broadband penetration in the country by 2023. According to him, the digital economy has recorded a 45% increase in broadband penetration under President Buhari, up from 30% recorded in the 19 years from 2000 and a 10% increase from September 2019 to November 2020. And that's it on NC4 to watch, which wraps up this edition of Business Edge. Thank you so much for joining us. My name is Solulokwe Adeleru Balogun. Don't forget to follow News Central on social media. We are at News Central TV. You can head to our website. You can also follow us on YouTube and download our mobile app on your Play Store and App Store. Have a pleasant weekend. And until Monday, be financially wise. I'll see you next time.